Hello, everyone, and welcome back to my channel. Today, we're going to be talking about the best stocks to buy and the ones I generally avoid. And I'll explain why. And also, the AI market is heating up. Competition is getting fierce to the point where these big mega cap companies are poaching each other's top engineers. But before we get to it, let's take a quick peek at my Roth IRA and see how we're doing compared to the S&P 500. So from July to July, my portfolio is doing 40%, and the S&P 500 is doing 11%. So we are beating the S&P 500, which is great. And as you can see, we have companies that are very safe, which leads me to it. I've been investing for almost 6 years now, actually over 6 years, and what I realize is buying safe companies at great prices are the best stocks to own. I used to think, oh, let me get this super hyped up play, think I'm gonna make 600% returns in a day or two, or take on these businesses that have huge debt and thinking I could sleep good at night. What I realize is the more money I put into the market, the more safe I want it to be. And in reality, by being safe and picking the right companies at the right prices, I was outperforming my old portfolio by a long shot. So let's talk about how I got into that mindset. And that mindset started with a company called Meta. Meta around here crashed to the low 90s and even got to the high 80s. I was buying a lot at this time. I was like, Meta, you're giving me Meta at $80 a share. Let me just buy it. I kept buying it, buying it, buying it. I made a good piece of my portfolio into Meta. Meta started skyrocketing and it went all the way up to around this mark. And that's when I sold it. I thought Meta doubled. A company as massive as Meta should not be growing this fast. I should not be doubling my money in a few months or less than a year or a year, even if that, on a company like Meta. I'm like, okay, I'm going to sell the top and buy the bottom. As you can see, I never had the bottom. Until this day, I regret selling this. I remember till this day, it was on a cruise ship. I got signal somehow. I'm like, oh no, Meta's at 286. Let me just sell it. I sold it thinking I'm gonna buy it by the time then the cruise is over. I'm gonna buy it maybe 200, make some money. But in reality, I never seen that. And a great company like Meta has gone away from me at these values. Yeah, I made good money, but it taught me to buy valuable companies and hold on to them. These are assets. And this is the companies I could hold, put a lot of money into, and sleep well at night. So companies like Google, I've been buying all the way in here. Also some in the 80s. Give me this company all day and night. I will buy it. Why? This company is massive. This company is not going anywhere. And as you can see, Google is pretty much like an ETF. There's so many companies in that one company. It has YouTube. It has Waze. It has Android. It has Waymo. So many things. Google is so massive that if one piece of the business goes bad, the rest will cover it. You're on YouTube right now watching this. I'm on using Google Chrome to get all this stuff. So this company, I can hold, put so much money into it, and I can sleep at night and I can make very good returns because I'm buying these companies at the right prices. You see, every once in a while, the market will give you a price that is a discounted for a company, and you take advantage of that. You take advantage of these bear market cycles and buy these amazing assets because you will get a lot of returns and you will sleep safe at night. Another great company is Amazon. Amazon got as low as into the 80s, and people were saying, oh, Amazon is too big for itself. They're not profitable. But look at what they have. Amazon with the Whole Foods, AWS, the largest leader in the internet. So before AWS took off, Amazon put a lot of money into that. So Wall Street was discounting it, but they didn't realize the potential of Amazon once AWS was set free. And they got a lot of subscription based models. So what Amazon was really good, you could pretty much guarantee the returns every single quarter. If not, they're gonna grow more. How many people have Prime 5 years ago versus how many people have Prime right now? That number just keeps doubling and doubling and doubling. And these companies, like I said, subscription based, net based, internet based, there's not a lot of things that has to be repaired. So imagine if you own a company like an airlines. I used to own, American Airlines. These companies are so volatile, and anything that can happen to their business can happen, and it will cause a dramatic effect. A plane crash, COVID, all the grounds are flighted. Put on the floor. They can't fly. These companies have all these risks that are associated to it. And guess what? Imagine the repairs. These jets need to be repaired, regular maintenance, all these traffic control, all these maintenance people and check-in and all that stuff. These companies burn through so much money of their profits to the point where their net margins are not that big. But if you look at a company like Google, you subscribe to Google subscription, and so does 20 million people else. That's pretty much free money to them. They already made the product, and people are just subscribing to it. There's not really that big maintenance fees. The engine's not going to break on this. Or a company like Carnival Cruise. Yeah, you would have made a lot of good returns if you would have bought here in the lows. But you see what a company like, we see what an event like COVID can do to this company. It could pretty much put it out of business. These ships were docked. They were not really making profits during the whole time. They were burning through everything. And these ships, they're not cheap. Billions of dollars every single time a new ship comes out. A competitor makes a new ship, billions and billions of dollars. So that's why I stay away from these companies. I like companies that are safe, that print money. There's not a lot of money to maintain and manage the fleet. And imagine a ship that breaks where all the sewage system starts backing up, and Netflix makes a documentary on you called The Poop Cruise. And it's just for Carnival. I recommend you watch it. It's pretty funny. So these are companies that are pretty much one-sided. Their cruise business, they're gonna have ships. Maybe they could partner with flight companies, but this is all their specialty, and they don't really broad out. Versus Google and Meta and Amazon, they have so much different things. So if you could find a company like my favorite company, which I'm wearing the hat right now, Palanteer. Palanteer doesn't own a lot of companies, but a lot of companies need Palanteer. Palanteer is a software that almost every single company needs it because they're the Messi of AI, as Dan Ives says it. They're so good at what they do to the point where Google, Amazon, what else? Microsoft, Tampa General, all these major companies, United Health, need Palantir and use Palantir because they can't find anything better. So if you find that a company that has that moat, that potential to grow and sell to everybody, including the United States military and all these branches like the Air Force, the Marines, all these things, this company is destined for growth like this. I wouldn't buy Palantir right now, but Palantir has been my best buy of all time. These returns have been life changing. So next, let's talk about this heated AI war. AI is getting so big, so powerful, and so competitive to the point where these companies are poaching each other's best engineers and trying to take them over for the talent. So let's take a quick peek at this video.
Welcome back to Squawk Box. OpenAI's CEO Sam Altman addressing Mark Zuckerberg's Meta platforms. He's trying to hire away OpenAI's workers. In a memo to OpenAI researchers that was obtained by Wired, Altman said the following. He said, quote, Meta has gotten a few great people for sure, but on the whole, it's hard to overstate how much they didn't get their top people and had to go quite far down their list. Altman dismissing what he called mercenaries and said that he believes Meta's behavior will lead to cultural problems for that company. He also said OpenAI is evaluating compensation for its employees and that he thinks there is much more upside to shares of OpenAI than of the publicly traded Meta. Now, CNBC has reached out to OpenAI for comment just to put some numbers on this thing. Supposedly, some of these people have been offered, multi-year deals worth $300 million. These are for
$300 million for these engineers. Meta's poaching. They also took people from Apple and all that good stuff, and Google from the Gemini side. So these companies are they have the money, they're going to spend the money, and this competition is fierce, which leads to Nvidia. Nvidia is also a great company that, as you can see, every single company that needs it. And these other companies are in my portfolio. I got Amazon, I got Nvidia, I got United Health, the world largest healthcare company in the world, insurer, I mean, and Google. So these companies, I could go to bed, I could be safe, and no worries about that. So I hope this helps. I hope this makes you pick companies that are safe, and you will see if you buy them at the right prices, because you will get that discount every once in a while. And when you do, you load up. I'll see you on the next one.